Hey, so I thought it would just be quicker if I did a screen share and discussed my stock ideas for the week instead of typing them out. To start real quick, just generally I'm bullish on the market, and that's important because, if I'm not bullish on the market, I generally won't trade. There'll be periods where the weeks will go by, even sometimes months, when I wouldn't trade. But right now we're actually seeing a very good and healthy market. We have the major indices QQQ and SPY breaking out to new highs. And SPY, in fact, you're actually seeing it coming out of a 1.5 year base here. And then if we just go back here to QQQ as well as an SPY, in the shorter term, we are actually seeing some range contraction, some healthy range contraction. So here we basically have, starting from around April, we had a decline of about 11.5%. And then here around June, we did about 2.6%. And then recently, we got here about 2%. Now, that's actually quite healthy. And then as we broke out to new highs, so this level, this old high, and the same action on SPY, and especially the SPY here, because of that level being so long, that resistance, the fact that we broke out right here, and that we're making these range contractions or volatility contractions into the level, and then breaking out, and then coming back in and testing, that's very, very strong. So, now I'm extremely bullish, and we're gonna, now it's the time to be risk on. We also see the 150-day is moving above the 200-day moving average, the red one over the yellow. That's happening on the QQQ as well. And actually recently we're seeing that happening on the IWM. Now the IWM, it has been lagging the QQQ and SPY, but now we're actually seeing some healthy movement. Essentially, another thing that we have to be aware of here is that, especially on the QQQ, we did have this correction here, 23%, and then we went back to the new high, and then we came in at 11%, which is about 11.22 is about half of 23%. And now we're breaking out to new highs. So, there is a possibility that we could correct, half of 11%, maybe 5.5%, 6% from here. That is definitely, on the cards here. So we just have to be aware, QQQ could probably come in, yeah, there it is, 5% right to the 50-day. So that's a very real possibility. And actually, that may be quite healthy. If that happens, and then we bounce back up, that will be extremely healthy. And in fact, the stocks that we trade, the market leaders, the high RS, the high earnings growth leaders, they actually will just consolidate during that period. And the way that we trade, we shouldn't really be stopped out of those positions. Those ones will just consolidate at their highs, while the market may pull back into this 50-day, and then we go. But it is also very likely here that we blow right off the top. So either way, we're bullish either way. So let's get started on the different stocks here. So I compiled a list by scanning the market on Friday, and then I included those stocks in my watch list. And I also have some stocks that I'm watching based on positions that I have open, and also just other stocks that I'm watching. So the first one I wanted to look at here was SHOP. Now, the thing with SHOP is that this is not the traditional, this is a very strong momentum leader. This rise has been linear, all right, and it basically takes small pauses. It's quite extended, so conventional wisdom would say not to trade this, based on everything. But what I am seeing here is I'm seeing amazing range contraction. We got 17 to 8.5 to 4.5, and then we have these 1, 2, 3, 4, 5, 6 days right here below this level 341. You know, I think that if we can get one more inside day, 1 or 2 more inside days, this could go right here, 341. And if, you know, if the market's very strong, and here we have earnings in a couple days, but, you know, an A plus setup would be one more inside day. One more inside day would be A plus for momentum move. So this is not like a long-term holding. You just be looking to capture, you know, a surge into strength out of this consolidation here. That's shop 341. I'm going to go ahead and set an alert for that. The market's ripping and it goes, it's probably going to give you that few percentage points, you know, for that low risk trade. Okay. All right. The next one that I had was I want to look at was CHGG. CHGG I have here at 44, so it's an earnings orb on 729 AMC aftermarket close. So it's a aftermarket close. They're giving earnings on Monday, so we look to trade this on Tuesday morning. So what we're looking to happen on Monday is we hope for an inside day on Monday. Because of this amazing strength, you see this volume, it surged up and now it pulled back and it's kind of consolidating here. So ideally we want to see a very small range day right around here, right around that 44 level. And then for them to give positive earnings. And then based on that positive earnings, you know, we're going to watch that 44 level. So I'm going to set an alert here at 44. I'm not going to buy it, you know, until Tuesday morning, and depending on what happens on earnings. Okay. Next we have NEO. NEO has earnings before market open on 7:30. So 7:30 is Wednesday. No, Tuesday. Okay. So NEO, the level that I like here was 24. Now NEO, actually this base here is, well, you know, CHGG, I don't think I even told you, let me go back to that, why I actually liked it. CHG had several range contractions here and then broke out to new highs on volume and then pulled back. So that's very strong. This is exactly what we want to see, where old resistance becomes support and then it just consolidates right here. And then the earnings orb. Okay, so the next, let's go on to NEO. NEO here, we actually have a base forming from May. So May, June, July, you know, almost 2.5, 3-month base, which is good. We are looking for bases at least 2.5 months or longer. The stock also, the stock's rise has been quite linear, except for this little issue that it had right here. But that was like, you know, many months ago, and when the whole market crashed. So, and that decline was about 40%. So, you know, it's dicey. It wasn't 50%. So maybe we, you know, we could forgive that. So let's see here, 44. You know, with earnings coming up on Tuesday, what I'd like to see is another exactly like the one we talked about just now, CHGG. We want to see one more inside day right here on Monday, and then we can get that level at 24. Now, another thing that I also look at is I use MarketSmith. And I use MarketSmith to identify earnings acceleration, sales acceleration, earnings growth history on different companies that we're looking at. So I had already pre-looked at these companies, so the ones I'm talking about actually have good data. So we just look at NEO here. NEO has here, you know, recent quarterly earnings increases, 133%, 50%, 600%. and average annual earnings of 40%, 47% growth, and then next year is expected 63%, and the year after 38%. So it's like insane growth expected, and it's having this range contraction pattern. So we got here, this right here is 13%, and then here is 15%. So you know what? It's not really giving that. It's kind of slightly erratic. Perhaps we could let it go for one more contraction. So come up into here and then tighten up, come back down a little bit and then tighten up. So we got to give it at least 3 range contractions. So I wouldn't say it's not necessarily ready yet, but we will keep a watch on the level 24. But you know what? Because of earnings and because of the strong earnings growth, we may just earnings ORB it on that day. So see, that's earnings orb 730 BMO. Okay. All right, and then the next one we want to look at is Zen. Zen, we're looking at this level 95. And what we like about Zen is also another very strong market leader. It's also not software group, just kind of linear growth momentum. It's also one of those kind of, because the base is kind of only a 1 month long, the beginning of June to July, so 2 months long. It's conventional wisdom might say that you need the base needs to be longer, but because of the linearness, the linear pattern, I've noticed that these sometimes the bases can be a little shorter and they work, especially when earnings are very, very strong, which is the case here, I believe. So let's look at the earnings at Zen. So we got here quarterly earnings growth of 100%, 900%, 999%. So it's just like totally off the wall, insane earnings growth. And then, 5 years history doesn't have any. It's actually only recently started getting good earnings. And expected to grow 22% next year and 118%. So in sales growth as well, accelerating. But now what is nice here is we do have some range contraction. So we have one from here to here. That is 8.6%. And then one from here. Here 8.14. So it's it is a contraction, although it is kind of a little tight. And then we have one from here to here, which is 5%, which is nice. So because earnings here, so we have earnings coming out. Earnings at 7:30. So we're going to look for aftermarket close on Tuesday. So we're going to be trading this Wednesday morning. So what we'd like to see is Monday and Tuesday inside days. We'd love to see very tight range days right below this 95 level. So earnings 7:30. So we're going to trade it on Wednesday. Wednesday morning, provided that it doesn't already leave the level, and also provided that it tightens up right here really nicely. Okay. Next one we're looking at is STRA. STRA, the thing about this is, it looks very good. I just haven't been having very great success with the kind of unknown names, a little bit more unknown to the Momo crowd. But this could work. I actually was in it, and I think I took a profit and then exited at some point. What do I have here? I thought it was good through 95 earnings orb. Oh yeah, okay, so earnings is on the 31st. This could go, you could catch a few percent because it tightened up into this level. And there actually, you know what? There is some good range contraction pattern here. Look, watch this. So we got one from here to here, 7.6%. Okay. And then we got the next one from here to there, which is 3.4, about 3.5%. And then we got one from here to here, which is 2.9%, or 3.2%. Okay. So yeah, in theory, we are having range contraction. So ideally, what we do have is one or two more, one Monday, Tuesday, Wednesday, because it's reporting before market open on Wednesday. So Monday and Tuesday, you have 2 inside days, and then you wait for earnings, and you set your buy point here at 190, because you really got to make sure it's going to clear that level there. And you want to see the earnings right at the market open. Just run straight through that, or do that's more risky, or do a 50-minute ORB. But if it's a very strong earnings winner, it's unlikely that the ORB will, because you might not get filled. So, you have to see how the market's feeling on the morning. All right. Now, STRA's earnings. So if we look at STRA, the earnings situation is, not bad actually. The last 2 quarters was 112%, 104% from previously 48 and 2%. So that's actual acceleration. Actually, no, that was sales. That's sales acceleration of 100% in over 2 quarters. And then, it has pretty decent earnings acceleration here. Well, yeah, it's pretty good. And then well, you see here the 5-year growth rate is actually not good. It's only negative 2% earnings growth. So, but next year is planned at 35%. So this one, it may not be the A+ winner in earnings. That's, perhaps maybe we'll let this one go. All right, let's move on. The next one I had is TWLO 150.50. Okay, so TWLO actually, I have been trading TWLO. I believe I took TWLO right here. Because I saw the tightening at this point, and it just looked really low risk to enter. And I think I may have gotten stopped out at this point, and then took it back on the way up. And then, I continued to add to my position when it came down, and then sell up at the highs. But anyway, the TWLO I had here at 150.50, and I was actually waiting for this because it was one of those linear moves also. It was extremely strong earnings winner. And we have here, 200% earnings growth quarter over quarter, last 2 quarters, 180, 160 prior 2 quarters. Before that, 80%, 77%, 68%, 54% sales growth. And, it's just an insanely, linear straight up move, which is extremely high momentum at this point. So we're willing to allow it to have a less size of a base because of that. So because here we have, here you could say the base, it kind of is starting around this area. So for around May, June, July, yeah, we have about 2.5, 3 month base. This is pretty strong, but actually from this point, say June, so really it's only, 1.5 months from the real, the real point right here where the base actually starts. Arguably this right here was a previous base, and now it's moved into a new slightly higher base that starts from June 10th. But because of the linear character of the move, going through the benefit of the doubt, and here have our earnings. So we actually have good range contraction here since this point here. let's take it from this line. We're starting to have range contraction. Now we have 11.6%, and then the next one is 6.3%, about half of it. So we're seeing about 50% correction. So it goes up and 50%, about 6.38, and then from here it goes down to 4.6. So not as steep. What I would love to see is one more range contraction. So we have 1, 2, 3, one more. So and that would be basically like 2 inside days. We just pull back and then it come back with an inside day. So that we could have earnings here on July 31st, which will give us the aftermarket close on 7/31, and the level is 150.50. So we are going to watch that level right there. And this is old stuff, already out of TWLO. For profit, yeah. So I was basically, I kept selling into the level, so that I wasn't, I wasn't doing 2 to 1 necessarily. I just kind of saw that level and I saw earnings coming. So every time it got into that level, I just sold out a little more. And on this day right here, on the last day, I just sold everything because what I want one more volatility. I only want A+. I want, this volatility contraction. I may not get it. It might go without me, and then I'll just have to let it go. And so then catch the next one. All right. So the next one I was looking at is KL, and I think at the time I didn't realize KL is something to do. It's a gold. It's a gold company, and it has very much a high correlation to gold. I think this is. I just wanted to look at this. I don't think I actually going to trade it. I don't see the setup. I think what I want to see is for it to base out more on the right side. All right, let's move on. TDG. Okay, TDG actually, this one is having nice range contraction pattern. It's really tightening up right here. It's having earnings here, so actually it has quite a few days. In theory, it could, if we can get one more inside day, really tight narrow range day here, that would be ideal, and then it can go, and then we could ride it for like 3 or 4 or 5 days before earnings, and then sell out, for a few percentages. I think that could be very feasible because TDG actually has okay earnings. It's 17% growth for the past 5 years, which we look for 20%, so it's kind of okay, but because of the range contraction, and then even if we count this range contraction right here, 1, there, 10%, 2, 5%, 3, 3.9%, 4, 4.6. See, it's getting a little bit sloppy there, less orderly. So, and then also it's not crazy earnings, so, it's not super beautiful. But it's okay. It's pretty good. If the market's ripping, we may take this, but we may just sell quickly and just get a few percentages out of it. So should be good. Let's wait one more day. I'll keep it on the list. I want to wait. I want to see if it can just tighten up one more day, and then I'll put an alert on it. All right. Workday 219. 50. Okay, workday now. Okay, see the move is linear also, which means super high momentum. It's just kind of one of those market leaders, software leaders that you just kind of have to give them the benefit of the doubt if they are able to form like a 1 to 1.5 month base and actually have some range contraction pattern going on here. So, and range contraction pattern is basically kind of like triangulation. It's when we draw the flag system, except the traditional way to draw the flag and all that. But I like to think about it as a range contraction pattern more. It seems to work better for me. So here we have 1, 12 and 8.8%, and then 2 at 8%, so nice contraction, and then 3 at about 8%. But now you see how it's come out of the base. The base, right, you could say maybe starts right around here. So, you know, it definitely just needs to tighten up on the right side. I do not like this candle at all, so I'm definitely not going to alert yet. Keep it on the watch list. Let it tighten up into this level, into the 219.50 level. But it's not ready yet. Not for tomorrow. Not for right now. But keep it on watch. Alright, DXCM 157.50 is the level. Earnings coming up, yeah, on 7/31, which is Wednesday. So ideally, we want this to go like, you know, Monday, Tuesday, 2 inside days, right here, right into the 157.50 level. Well, actually, 157.50 is quite high. Where's 157.50? So no, ideally you just want wherever if it can just show up with 2 inside days right here, just tighten up, and that would become the level. It'd probably be like this 155, 155.50, or wherever it tightens up right there. Should become the level. Probably this 155, I would say. Yeah. If you look back, this 155 level, probably even 156.50. So we'll see how what happens over the next 2 days before earnings. I'm definitely going to keep an eye on this one. Alright, HRC 107.50. Well, I don't know why I put this on because, you know, this is a violent move down, so I just don't want to do this anymore. But wait, you know, so this is why I had it. Yeah, the move was linear, but you see how in the recent past, you know, this is not far away. You know, I'm not that free. I can forgive things. Well, look, if it happened, if this had happened back here like 6 months or 8 months, a year ago, you know, we could overlook that. But because the violence happened so recently, you know, it's just a little less safe, but it could work for a few percentage. But because we have so many other setups, so what we're also seeing now is a plethora of setups, which makes things, which is a sign that things are very good. So this would probably just work anyway. Probably would work because there's so many setups in the market. But if the market wasn't you know, so strong, you probably have to let this one go. And because there's so many other good setups, I may let this one go, but I'll just keep it on watch here. It does have earnings on August 2nd, so I may just let it tighten up. If this tightens up into earnings, you know, an earnings report, and this HRC, let's just see what the earnings are on this. You know, so the earnings on this is 19% 5-year annual growth rate. So actually, that's why it's a linear move, because the last 5 years were extremely strong. So, you know, I think that, but right now the quarterly growth in sales and in earnings seems to be decelerating, actually. So definitely not buying this before earnings. You know, I don't really read the earnings reports. I just watch the price reaction. If the price reaction, you know, if it tightens up and, you know, there's an opportunity, then we can see at that time. So we'll keep it on watch. Next we have INVH. INVH is, okay, it's just been a very linear move here, but you know, it did decline here. How much was that decline? 19%. Okay, so it looks bad, but it wasn't that bad. It was only 19% at that time. It looks like a recent issue. And it's starting to form its first base here, but it's very momentum linear. Let's look at the earnings here real quick. There must be something going on with this stock. So it's a REIT. Okay, so REITs, conventional wisdom if you don't want to, you know, trade REITs. Generally, I've listened to that, you know, except for IIPR a few times. And it's actually decelerating in its earnings, I know, in its sales a lot. So maybe, you know, but what I really liked about it, why I put it on the list, is look at the tightening on that and look at the range contraction pattern on that. The earnings coming right up right here. You know, there's a lot of volume right here. You notice that? So all this volume indicates something is going on, something really going on. It's a REIT that owns and operates single-family homes for lease across America. Oh yeah, I think I remember reading articles in the Wall Street Journal about home ownership going down and people renting more. It's probably something to do with that. You know, maybe. I mean, this has earnings on July 30th. How long is this base? This base is from middle of June. The base is very short. Because of the linearity of the move, it could work. It very much could. You could probably make a few percentage out of it. Maybe we'll try it with small share size if it has the earnings or around that. 730. INVH 730. Yeah, but wait, I did say the sales were actually decelerating. Yeah, I don't want to mess with something. Sales are decelerating right now, but it is a very, very strong pattern here. We'll just watch it. Keep it on watch. All right, PLD 8250. Okay, PLD also, it's a very linear move. And you know what, an INVH here, you know, this decline actually happened with the rest of the market. So the whole market collapsed and INVH only went down 20%, which is not bad. You know, I'm going to give this a try. Let's see. Let's give it a try here. INVH 20%. And we got to watch out. It has earnings coming up right here. There's going to be earnings orb opportunity. It's reporting earnings on aftermarket close on 7:30. All right, so we're gonna have to like see if the earnings report shows some type of amazing, you know, volume in the right direction and going through the level, giving us opportunity. We're not going to chase it through gaps here. If it gives us opportunity through the level, we'll go for it. All right. Next, we'll look at PLD. PLD, I like this. Also, you know, it's been quite a linear move, very much up. When it had this, you know, contraction right here, it was, how much was that? That was 20%, which is not much. And also, it was during the time when the market crashed, so during, you know, December. So, you know, that could be probably forgiven. And then since then, the move has been quite linear. And now, it's starting to base out right here. We could say that this base, you know, pretty much started right around the middle of June, right here. It's about 1.5 month old base, and usually we want to see 2.5 to 3 month old, 2.5 month plus 6 month bases or longer are ideal, are the best. But because of the linearity of the move, you know, kind of straight up, and now it's pausing, it could work. So let's look at the earnings here on PLD. So actually, PLD has decelerating earnings on the quarterly, but on the last 5 years, it has 49% annual growth. That's extremely strong. That probably explains why this move has been so linear since the financial crisis of 2009. So it's straight up, pretty much, because earnings growth has been growing 49% a year, which is insane, and it's a REIT. Conventional wisdom is to not trade REITs, so you know, and decelerating earnings, so it wouldn't be, you know, maybe we can see this tighten up. So just keep it on watch. Let's see it tighten up. And if you look at the range contractions here, they're pretty good. They're like, here we have 6.28% and 5.84 and 3, and here we're 1.5. Yeah, this could go right here. Could very much go because this is a lot of contraction, so it could pop. I mean, if it gives me one more inside day, like a really tight day, to give me really low risk on the low of day of entry, you know, I'll take it. So let's watch it one more day. One more inside day, it'll be A+ to me, but not right here, not just yet. Okay. VEEV. Okay, so that's what I had for, you know, potential buys. VEEV here, what we want to see on VEEV is we had one range contraction here of 10.7%, and then another one of, wait, what am I doing? So the first range contraction here, from here, there, 10.8%, and then from here to there, 7.7%, okay? In fact, actually, what's likely to happen is VEEV is likely to go up and be a day more. And then what we want to see actually is for it to come down. I'd like to see it go up a little more. We're not going to buy it, and we're going to wait for it to come down. On that third range contraction, we want to see narrow days and just come down. And yeah, we might want to see it do something like this. You know, make a something like that. And you know, that would be you know, pretty good for this super momentum mover. And this one just been going straight up. But you know, we actually, what would actually be ideal is if it needs to be, you know, sideways is good, but actually coming down would be better. You know, kind of. Yeah, like that. With that downtrending kind of thing. And the tighter it got, you know, if I could just even give even the smallest, tiniest, I can't even draw lines as small as I want, but you get the idea. A super tiny, tiny inside day. Boom. This one could probably go off. You know, the other thing about it is this space is only, you know, 1.5 months old. But you know, it tends to work because of the linearity of the move. If we look at the earnings on these are the only type of moves, the only type of stocks that will do this is where, like, this thing has 45% 5-year growth rate, 45% over 5 years. That's absolutely insane. I mean, you know, that is, you know, superstar. This is super performance stock. This thing, you have to, you know, you can't wait for the 6-month base to form on this thing. Well, you could have here when the whole market was crashing. You know, this would have been great to buy it right there. You know, but at this point, you can probably catch, and even here, though, we're not looking for a big move off this. It's too, you know, dangerous. We just catch a few percentage, you know, off our risk, whatever our risk, into it, sell out, and then we ride a small position for, you know, hopefully the story continues. Software company, you know, develops cloud software from sales and marketing. So that's basically the industry, that sector that's really taking off lately. The next one we have here is CIEN. CIEN, okay, I think it just needs to tighten up. It's actually very kind of erratic. I'd like to see it tighten up a lot better. Yeah, RNG already left the level, right? So what I was thinking on RNG was that, here's my thought. So it didn't happen yet. So I'll put it on here because of what I want it to happen to be, you know, a good setup, A+ setup. So we had one range contraction here, 13%. Next one here, 6. And then what I would like to see, so it has earnings coming up. So it's just going to do something super, you know, volatile on earnings probably. So we're just going to watch it. It's too late. It's already left the level. All right, so ADI, probably this is already extended. It needs to develop the right side more. Okay, so that's it for now. If you guys have any questions, let me know.